credit. So I wasn't spread betting yet in those days, but what we had was margin trading. So you could buy stock and not have to pay for it for 25 days. So as long as the stock moved up, you could sell it, redo it, and buy it, and so on. So it was called a T20 or a T25. Problem when the stock market crash came, of course, I was margined up to my eyeballs, a bit like somebody having a lot of property with lots of mortgages, and I couldn't afford it. So I got into big trouble there, and that was my crashing end to my stock market career. And then I came out of the markets basically because there was just very little going on. And how I made my first million, some people might have read about this, we'll put the Millionaire Dropout. There was a guy called Richard Hughes, and he had a phone delivered. And I can even remember it was CityLink that delivered it. And this phone was 1,200 quid. And it was an NEC, like big brick phone, not the Motorola one, but it was like an NEC one. And I thought, there's got to be some money in this thing. And I thought, right, you know, this is a market I want to get into, but of course I've got no money. So I started buying and selling phones, and a lot of them were car phones at the time. I had a little ad in the Sunday Times. And I built up a business basically buying and selling phones, and that's what gave me the money to go back into trading and investing.
Wow. So what was your big mistake when you were margined up to the eyeballs? What were some of the bets that you were making, not bets that you were making, some of the stock market chances you were taking that went wrong?
And that's the big mistake, like you said, it was margined, right? Because if I'd had enough money to withstand the falls, because if anyone goes back and has a look, if you've got something like ShareScope, you can go back to 1987 and you'll see the October fall, and it was dramatic. It was about 20% fall, so in terms it was a large fall. However, stocks actually came back quite quickly, you know, in terms of a year and a half. But if you haven't got the money to hold the stock, that's where you're in trouble. So probably the biggest lesson was about being over margined. The other thing at that time, I was only buying, I wasn't going short, so I wasn't betting for things to go down. I wasn't very diversified, I didn't have gold or anything like that. So I think the first lesson, and still very true today, is, you know, don't put all your eggs in one basket. Be careful. It's all very
really badly for you in terms of, say, gold or phones, like you said, like phones were doing well for you. Was there a specific market that went bad for you?
In the stocks, pretty much everything got sold off. And it all started on a Friday afternoon, Friday evening. I'd already left. And you remember, this is again, it's pre-internet days, but it was Wall Street that already started dropping on the Friday. So by the time I'd got into Monday, and it's funny, again, what Casper was saying about instant gratification. The majority of people want instant gratification. They want the result today. Now, my correlation is that younger people want instant gratification. And if you look around the room, the majority of people here are, not saying older, because we're all going to live till 130, like Jim said, you are typically 45 to 50, okay? That's not by an accident, because that age group, in my view, has been better investors, better traders, because you know what? They don't need or want instant gratification. The 21, 22-year-old who racks up to me with £1,000 or £2,000 needs instant gratification. So that's the main reason why I shy away from younger students. Now, I have got some younger students. One of them is watching this in Sweden as we speak, who inherited quite a bit of money. And he's very responsible and a very smart guy. But on the whole, it's a slightly older bracket. The other reason why, let me tell you why I tend to do better with people who are 40 or 50 plus. When you're 20, everything seems like a big deal. Yeah? But as you get a little bit older, you've seen the movie before, and you tend to be more stable on the whole, and your reactions and your emotions, you know yourself better, you've seen a couple of market crashes like me, and you get to be, you get to deal with things better, whereas the younger crowd, they're just too up and down. Anyway, so primary trading is 12 months to 3 years. This is probably where I make the majority of my money. Now, before some of the people that say, oh my God, 12 months to 3 years, this isn't everything, but this is where I make the majority of my money in that sort of time frame. Also, please think back. The Spice Girls, I won't play it, Wannabe, was what year? Do you remember when the Spice Girls started? Roughly? 1996. Oh my God, a Spice Girls fan. 1996. Yeah? Yeah, if I play that now, a lot of you will still know the words. I know it's annoying, but that's the reason why they did well. Or you hear a song on the radio and you think, oh my God, And then you realize, I keep saying, oh, when we were here last year. We weren't here last year. We were here 2 years ago. And I can remember 2012, which is when we had Krispy Kreme donuts, which was taken over, by the way. Immediate trend. This is 10 weeks to 12 months. We can make money in this sort of trend as well. And this squiggly line here is the shorter term trend, which is, for me, shorter term is 2 weeks to 10 weeks. Now, if you're in your life that you, yeah, so that's, to me, my shorter term sort of time frame. So for me, as I say, if you cut me open, what am I? I'm a trend follower. I made my first million from trend following. The commodity money was made from trend following. And, you know, biotech was trend following. It's pretty much, a lot of it, what I do is following trends. Now the demographics that are going on, now again, looking at what Jim Mellon is talking about, it's a trend. So trend following is ideal for you guys who don't want to be watching a screen all day. You don't need expensive software. We can make money from a trend going up and down. What do you see? An old lady